Hello everyone. Guys, hear me? See me? Everything alright? Chat? Everything fine? Probably a day what you guys are seeing. Okay, good. Everything fine, loud and clear. So, welcome everyone. Today we're going to show you a new strategy that's going to be released next 0.3537, and it's a pretty interesting one because it's a new arbitrage strategy that will allow for our users and traders to exploit the opportunities that appear between perpetual markets and spot markets. So just a quick disclaimer here. Everything that we are going to show today in live is demonstration. So everything I'm going to do here, it's not a recommendation of any kind of computation. So just for testing and showing how everything works, right? So be sure to understand how the strategy works before you start using it with the real money, right? So first, let's talk a bit about what exactly is the strategy. As you can see here on this graphic, we have on the blue line, get here, okay, we have on the blue line, it's the price on the perpetual market, in this case on Binance, and the orange line is what's the current price on the spot market. What happened is that over time, the tendency for the price in both markets is to converge. So the basic, as you can see live here, there is a big difference between them. So the base of the strategy that when there is a big enough difference between these prices, there is an opportunity where you can do opposing trades on each of them. So you can kind of capture the spread between markets. So a good example I can show here, what would happen strategy is, right, for example, at this point in time, where we have this size, where the price of this market would be on the perpetual market 31.763, while on the spot market the price would be at 31602. So as you can see, there is a 0.5 approximately difference between them. So what usually would happen with the strategy working would be that the bot would then create a sell order here on the Perpetual Protocol, and at the same time it will buy on the spot market, same size equivalent. So that way, the moment the bot is the orders are live, you are capturing this spread. So what happens over time is that the price between those markets will have a tendency, as can be seen here at this point in time, to converge to the same value. So as you can see at this point, a few 1, 2, 3, 4, 5, 6 minutes, 4 minutes after the divergence appeared, the price converged again at the same level. And the point of the whole strategy is to, when this happens, the trades would be closed. You would close the short position, the perpetual market, and buy back the same amount spot market. That way, at the moment the trade is closed, you would have a zero delta between the values that you have on each market. But since you opened with this difference, you would have a profit that will correspond to this moment, right? So do you guys have any question about how the strategy works? If so cash and carry, arbitrage, the time in, what mark equals 0. Yeah, basically that's the basic idea of the strategy, is to since the price will converge over time, where the spot minus market will be equal to 0, the result will be that if you moment you execute start the arbitrage, it's expected the price to return to the same level. So it's basically a cash and carry. But since it isn't exactly a cash and carry because it is on perpetual markets, and the time frame where the convergence and divergence happens, it's usually way shorter than future market with longer expiration date. Right? So any more questions about the strategy itself? So one, give it 1, give it 2, 3. Just get back here so you guys can see how the difference happens time. Okay, so let's show how this works on the bot, right? Here we have our Hummingbot ready to go. So to start the strategy, the first thing you have to do is to basically create the strategy. I'm assuming that you already connected to the market. You want to execute it. If you want to check if everything is connected, you type the command connect here. Right. So a question, how do you manage the order book slippage problem for the premiums? Well, I'll show it as I create the strategy. We have an option where you choose, you pick up what's going to be the max slippage that your orders on spot will execute. So you can have actually what you do, you set a limit of how much percentage the slippage on the order book you want to be executed. Can be seen here when at the end of the creation. So when I type create, I'll be asked what's going to be the strategy. We have the Spot-Perpetual Arbitrage. This is the name of this new strategy. First, you set up what's going to be the spot connector. In this example, I'm going to use the Q coin. So you can see that it doesn't matter. It doesn't have to be same exchange, both markets. So I'll use this here. Okay, sorry, got a little bug here. Let's start. 2 minutes. It's still in development. Our guys are flashing out everything that about the bot. I have to it. I'll reinstall it real quick. Really quick. This won't take long. Sorry about that. Okay. If you're hearing a kid talk by my side, is my my little kid that still haven't slept. Hold on. Okay, we are restarting the. There you go. Strategy. Spot-Perpetual. Coin. I don't know about that, guys. Sorry, everything was working finely earlier. Give me one quick minute. Here. Sorry again, but it will work. Don't worry. There you go. So, sorry about that, but everything will work fine. I'm not sure what is going on, but I'm sure our devs will figure out what happened here. Yeah, I'm able to create it right now. So I'm going to use this market as an example. There's no reason, just a random picking I did here today. So after choosing the market and the connector, what exchange is going to be and the market for the spot, now next we choose what is the derivative market we're going to use. For the example, we're going to use the Binance Perpetual. So you have the same pair, of course, or else exactly do an arbitrage. What's the size of the order you want to trade? So let's take, for example, 1.3. And how much leverage do we want? So you have to have a good idea how much leverage you're going to use, so you don't risk to being liquidated when you have an open position here. So let's put 10x. And the minimum spread where the derivative market will start the arbitrage. This is getting a bit back here to the the graphic. For example, if I set a value that I want only the arbitrage to start when there is a difference between these prices, that's, for example, at least this one. In this case, at least 0.32%. So the moment that the difference between the price in both markets go above this value that you set here, the arbitrage will happen. Depending on the direction of the prices, to open a short or a long position on the perpetual and buy or sell on the spot market. So let's put here 0.3, that, as we saw on the trading view, it's usually it happens at this value. And the minimum spread to close the arbitrage. This is what's going to be the difference for the positions that were open to be closed. So what the value you are looking to put here is usually the ideal situation is this value would be 0, so the prices would be at least crossing over each other. Like, again, getting back to the price graphic, it would be like what happened here, where the price crossed over one another. So this will mean that the price will totally converge to the same value. But you can set a value a bit higher just to make sure that if it get close to the price but not exactly the same price, you still close the trade. So let's put 0.05 here, for example. The next question is about the funding rate. As everyone knows, every set of time, in the case of the Binance Perpetual, every 8 hours, there will be a funding rate payment. If it's positive, the short positions will receive a value and the long positions pay a value. If it's a negative funding rate, the opposite will be true. And here you choose the bot if, when the time goes to the funding rate payment, with this question you decide if you set it to false, the bot will totally ignore the funding rate time. So it will act as won't consider if it's close or not to the funding rate payment time. But if you set to true, what will happen is, if it's really close to the funding rate moment, the bot will hold the trades until the payment happens. So if you have a short position and you're going to receive a funding rate for that short position, even if the price converges at that point in time, the bot won't close the trade to allow your short position to be paid. Right? Does that make sense? Any questions about that specific? Okay, so I see a question about the 10x leverage. It isn't exactly a lot, because it mostly depends on how big how big is your margin on the perpetual, because the size of the order on the perpetual will be proportional to the same size to the order on the spot. For example, if you set 100 USD, for example, and your arbitrage, or your leverage 10x, on the perpetual side, you open an order of the size of $10, right? So it's proportional to the spot size. Proportional. I got a bit confused here. The size of the perpetual order is proportional to the size of the spot order, exactly to keep a neutral a market neutral state. If you expect to pay the funding, that's a good question. I forgot to ask the devs about that, but I have to take a bit clarifying on that. You would probably close the trade so you don't pay the funding rate. So the idea of the trigger for the consider the funding rate is exactly to take advantage of receiving that funding rate, maximize the profit on the situation that you're going to pay, right? So on the question of about the slippage, the two last questions is where you set how big is going to be your slippage that you want to use in the trade. So this is mostly a balance where you want to make sure that your trade is going to be executed and you don't have too much risk on making sure that trade is. So if, for example, we are using here 0.3, so the expected profit would be around 0.25. So it wouldn't make sense for me to set a slippage at 0.20, for example, because basically when you add the fees to the trade, I would basically have no profit operation. So the slippage that you want to use have to be balanced on how much is going to be your expected profit. I'm going to set a 0.5 on the spot and 0.5 also on the derivative, right? So as every strategy we create, we set a name for the strategy so you can import it later. And there we go, ready to go. Hit start and bot start to do its work. As you can see here, it starts to tick the sorry, it starts to monitor what's the spread and what's the difference between the spread you want to execute. So if you take status live, you can show in real time how the spread is changing. Apparently there isn't volume on the market right now, so there isn't a big difference. See if it happens. Right? Okay, let's some space for the bot to run. I'll do something here so we can catch a trade. Let me just use a bit the open spread. Versions. Let me set this 0.15. I'll probably take a loss here, but let's just use this as a quick example. Bot can start execute a trade, so you can see. Oh, sorry. 5 minimum version 0.15. Again. Started. Okay. So as the bot tries to find an opportunity, let me know if there is any new question. It's alive, yeah. Chad, you pick what is the market you want, what's the pair you want to trade. So, for example, on the next week, at the same time of this live, we're going to showcase the new connector we're going to add to the version. That's going to be the Perpetual Finance Protocol. That it is a decentralized perpetual derivative market. It's built on XDAI, layer 2 on Ethereum, and there it uses USDC as the base, as the code currency. So what currency is going to be executed on the perpetual only depends on what's being traded on what markets you choose on the bot and what's being traded on the exchange. I think, for example, for BTC, I think on Binance you have you can do on USDT or USD. So you can pick whatever it's the market you want. What's the currency? So we're close to, let's see, 0.11. Okay, let's make it more fun. Let's make sure that the trade happened. 0.10. As you can see, it already happened. So, as you can see here on the, let me get back screen. There we go. Since I put a really small divergence value, the moment I start the bot, a trade was executed. So it bought 1.3 UN Phi at KuCoin and created a short position of 1.3 UN Phi on Binance. So and what happens now is that the bot will stay monitoring the prices until the price get back to a 0.05 difference, so it will close both sides of the trade. Okay, it's here. As you can see on the Binance, we have a short position open, and if you take a look on the let me get to oh, sorry, I forgot. It's on point, so I will show you that. So I have to log into. Okay, so what do we rebalance across exchanges? What do you mean rebalance? You mean transferring the transferring funds between exchanges? If that's the question, then no, it doesn't handle that part. I'm not sure. I think there is also some limitation of the code, and personally, I don't think it is a good idea to have a bot handle transfers between your account, outside account from the exchange. I think it would be kind of a not really safe thing to allow a bot to do, even if even if you own the account, you should go to, but and you run the bot or local computer, but I don't think it would be exactly safe to have this bot that. Yeah, Algorand and BTC, any available coin that you have on a perpetual market, you can do. And as Chad mentioned, you don't have to use the same exchange For example, you don't have to be on a Binance Perpetual and Binance Spot. You can do whatever connector our bot is able to connect to do this kind of arbitrage. Any spot between any perpetual. At this moment, at this current version 0.36, we will only have Binance, but on 3.7 we will have a new one, perpetual. That's going to be the Perpetual Protocol. Right. So yeah, the interesting part here also is that it might take some time to close the position. So maybe you won't see the position be closed on this live. So it might take some time for the price to converge again. But eventually both trades will be closed and your profit going to be the starting difference. If the prices are there is a slippage to consider, there is also the exchange fees to consider to add to the calculation. But yeah, that's it. It's a pretty simple, and in my opinion, it's really powerful. The trick here to be profitable in the strategy, I think, is the okay. Okay, so having some issues here. Are you guys all good here? Do you hear me? How's the transmission for you? Yeah, for the Perpetual Protocol, it's going to be included on the next release. So the moment that 0.37 is launched, you'll be able to execute this strategy with Perpetual Protocol. So what else do we have? No, don't worry. You can ask as many questions as you want. That's the whole idea. We want to you guys to know the strategy. Have go to the not sure. What do you mean by manage chopping up orders? I'm not sure I understood your question there. Okay, so let me get back here to the question. Is it possible if you set minimum divergence of 0.3 and do both things with 0.2 divergence? Because, well, it is possible that for this to happen, but this is where you have to measure your risk here. Because on this example, okay. Yeah, okay, sorry, my connection got a bit chopped here. But so just to wrap around, don't know if it was put it. So basically on the slippage, like I was saying, is more like you have to take a look at the markets, at the how thin are the order books, and think a bit about how much slippage and how much what's going to be the minimal conversions. So you do a less risky trade. If you put these values too short, too close to each other, it's increasing the risk of doing bad trades due to thin order book. So the other question was about the 10 BTC. So yeah, there is also this risk that if you have a big enough order, you're going to change the order book situation. You're going to move to lower profitability trade. So it's also on the same situation where you want to take a look at the order book of the market you're trading, so you don't overextend on the size of your orders and don't impact the order book by yourself. Well, yeah, I think the trading isn't closing for now. It's still at 0 points. We'll have to wait a bit more about that. So yeah, I think that's it. There isn't too much to. It's a simple concept, and I think it's going to be really fun to run this strategy with Perpetual Protocol too, because it's I used Perpetual Protocol for a while, and I like it. The trades happen really smooth. There is also the Ethereum fees when you transfer inside from your Ethereum wallet to the Perpetual Protocol. But once you pay that fees and the funds are on the XDAI layer 2 and inside the Perpetual Protocol, you only pay the trading fees, and it isn't as crazy as arbitrage on AMM like Uniswap or Balancer. So I like it a lot. Okay, so all the orders are input manually at the exact order size that will be submitted on either side. Yes, exactly. It let me see if I can show you the. Hold on. Let's take a look. Yeah, so as you can see here, right now on the spot, I'm not showing the spot because I have to connect to KuCoin. It will take a bit time to that, but as you can see here on the spot on the perpetual size, the size is exactly 1.315, and the difference is that the margin used is based on my leverage, so it ends up being exactly proportional one side from the other. All right, so any more questions? Yes, about running multiple strategies, you can do that. All you would have to do is to run two bots. You can't execute two strategies on the same instance of the bot. But with our Docker installation, you can have multiple bots running at the same time. Quarterly futures, you use this strategy on quarterly futures? Well, at the moment, no, because this first implementation our devs are working to make it run fine on the perpetual market, but we are still already doing some design thinking behind it, so see if we can how we can implement this to also work on quarterly. Okay. Any more questions? So if you hear a kid talking, my daughter beside me resisting the sleep. So okay, so yeah, about anything else you want to chat, ask, feel free to join our Discord channel. We have our devs there. I am there too to always try to related to the strategies. I try to answer more questions related to trading and strategies. Try to help everyone to how to set better ways to learn about the strategies that we have. But we have our dev channels where our devs also are around to ask questions. If you want to create your own version of the strategy for a coder, you customize a bit more every strategy that we have. And we have also 24-hour supports there too. Help with any setup, any bug that you find on everything. So I guess that's it. I thank you all for coming. It was really fun to show this strategy to you all. And see you next week. We're going to show the Perpetual Protocol connections, right? So see you all. Bye. And join our Discord channel. And feel free to ask any questions there.